That was really loud. I don't know if that was unusually loud, but that got me going. That got me fired up.
Get you going.
It gets you going. Welcome, everyone, to Pirates of Finance, the show where two finance bros do a completely scuffed podcast about finance, rarely talking about finance or what we actually do for a living. Nothing we say, do, imply, innuendo should be taken as financial advice or really advice of any kind, life advice, spiritual advice, whatever. Do your own research. We're just here hanging out, having fun. Two guys chopping it up on a Friday afternoon. With that, Jason, it has, I don't know, you've been away, so I don't know how much you've been tracking it, but this has been like an incredibly wild week in markets. And I really look forward to not talking about it with you on this episode.
Yeah, so first of all, I've been at a conference in Park City all week, but I want to start with a different tangent. You know what, I find it whenever we're at these finance conferences, you always get these global macro hot takes, which are both your and I favorites, you know. And one of them is that, you know, American manufacturing is dead, or we're going to reshore and everything. And I don't know about you, but like my family comes from the machine tool industry. So, and I grew up in rural Michigan. Like I've been surrounded by high-end American manufacturing my whole life. And so like even right now, I'm sitting at the headquarters for Diabolical Inc., and they make aftermarket, you know, security and storage kits for like Jeeps and Broncos. And they're doing great business here in like the Salt Lake area. Like it's just, there's a lot of micro American manufacturing that is really competition with Germany. Like at the higher end, you have a US and Germany, and we're still outpacing Germany. It's just on the widget side is where you have the Chinese and now moving to Vietnam, Sri Lanka, etc. And I always get tired of hearing like American manufacturing is dead, where I've grown up around it like my whole life, and we're still crushing it at the higher ends.
I'm glad you jumped in the deep end of the pool with a passion topic for you, right? I didn't know where this podcast was going because you've been gone all week. Clearly, you're fired up about something.
Well, yeah, because I've been at conferences, and you know, and as usually at conferences, there's always the panels on global macro. So you know, I'm fired up.
I love going to these conferences that are sponsored by trading firms who make money every single day on the bid-ask spread, inviting people who are pontificating on macro. Like that's I just imagine the people who are hosting the conference are like, just keep trading. We don't care. Just keep trading. Oh, you got a view? Great. You know, just keep trading. Oh, it's an expensive product? Even better. You know, it's Salt Lake, you know, this year, it's Hawaii next year if you keep trading. So it's always funny to me the way these things come together. But you do get these all these trading firms sponsor. They all seem to do skiing for whatever reason, by the way. Like the big 5 or 6 that happen every year all seem to go skiing in February or March, Salt Lake, Vail, whatever it is. And
you and I've talked about this so many times. I do not understand. Every one of these conferences is always in like these exotic locales. Like you said, Aspen, Vail, Park City, Napa Valley, whatever it is. And it's just like, we're honestly stuck in a conference room for like 15 hours a day. So might as well go to like, what was that movie, Cedar Rapids or Iowa, whatever.
Cedar Rapids, yeah, exactly.
We might as well just go there. Like, why are we spending money on these exotic locales?
I've never even see them so many times. I'm like, just go to Ohio. I don't care. Can we all just fly to Chicago? It's sort of central. Like we're just inside. Who cares?
Let's do a hotel right next to the airport too, so I don't have all the transit time.
Yeah, 100%. All right, quick change of subject. Jason, Twitter is so unbelievably predictable for me at this point. I did a little tweet. I'm not going to say verbatim, but it basically was the effect of like, I have fatherhood coming up very shortly. I actually thought my wife went into labor this morning. False alarm. But coming up very shortly, and I said, I'm thinking about legacy, and I was thinking about buying a nice watch to put away in a safe for my son. Instead, I've decided to buy a CryptoPunk. Here's why, with a little arrow pointing down. And in my head, I said, I know people aren't going to read the thread. People are going to reply to this all pissy. And the second tweet in the thread was, you know, now that the trap is set, we just lie in wait. Like the whole thing was just to see how many, and it was the number of people that replied to the effect of like, I was an idiot, or I should buy real estate or gold, or giving me like actual practical advice of what I should be buying. I was like, it is so unbelievable that no one, like people read the headline and they just refuse to keep reading down. They have to respond. They get this gut reaction they have to react to. Now, that's not really what I want to talk to you about, though. Because it got my wheels spinning. That was just me complaining about Twitter. Here's what I want to ask.
But before you get there though, this is what I'm here for it. By the way, the Corey troll era of Twitter that you've started to put out in the last month, I'm definitely here for it.
Yeah, I'm getting a little snarky, and I'm not even like tired yet with the kids, so we'll see how it goes. But because I kept doubling down, I was like, you know what? I'm actually going to buy a Charizard Pokemon card. Like that's what I'm going to buy, and it got me thinking. You remember, and this will probably get us canceled, but 20 years ago, there was that game, Fuck, Marry, Kill, or I don't think you can say kill anymore. Undead is what you have to say on social media now, because we probably just got, not that we were monetized, we got demonetized and banned. Right? There's the game Fuck, Marry, Kill. I want to play the equivalent, but for ridiculous assets. So if you have to buy something and put it in a safe for the next 30 years, and assume it's all like an equivalent notional amount, so you can buy a fractional amount of this stuff. Would you rather buy a CryptoPunk NFT, a Charizard Pokemon card, or a Rolex Submariner? Well, and you got to give me your fuck, marry, kill. Like you got to,
Oh man, you just like set me up for the worst.
I know.
I'll start with like, I love NFTs in theory as an entrepreneur and like a new form of LLCs. And by the way, you went punk, not ape, right? Not that it matters.
I went punk.
Right.
I actually think it does matter.
Ooh, we got to take a tangent here. You got to break down why you think punk versus ape matters.
So Yuga owns both of them.
Right.
I think Yuga has made it very clear that they are not going to be touching punks. Punks is its sort of own ecosystem at this point that they're going to maintain. I think it's a status symbol. But in terms of taking that $5 billion balance sheet and trying to constantly create value to breathe life into a brand, I think that's all going to get focused on apes. I truly believe I can make a pretty good argument that buying an ape is buying an asset that is going to have positive cash flow so long as Yuga is around. I think they are going to do everything in their power to continue to bring value because it continues to drive value to them as owners, right? It's sort of like, you can buy a Disney character to a certain degree. Like they have the big aspirations to do big things with that ape brand. And so I think there's more of an asset there versus I think CryptoPunks are more of a collectible.
Right. And the whole thesis, speaking of, now I'm fired up again. I got another bone to pick. Gary Vee is like CryptoPunks are the OG. And so they're always going to have value. They're going to have sentimental value, right? That's the idea, is like CryptoPunks were the original NFT or PFP. And that's what
everyone who has a Crypto Kitty, I'm sure, is like,
that's what I'm saying, man. I'm like, come on, guys. We were here 3 years before that, 2017. I was breeding Crypto Kitties. Where's the love? How is Crypto Kitties not the OG? And everybody's centered around punks as being the OG. I'm never going to get
it because it just doesn't make a Crypto Kitty doesn't make a good PFP. That profile picture is what it's about for the online avatar. I honestly think that's it. It's sort of like it was right time, right place, right part of the cycle. It fit the use case of being a profile picture that people could identify with. Not everyone wants to be a kitty,
Yeah, I thought I think they're better looking profile pics, but that's me. Okay, so we got the punk, we got the Charizard card, and remind me what's Rolex Submariner.
Yeah.
And then
or if you want to get weirder, you can choose whatever watch you want. I'm just thinking like 3 distinct collectibles.
Okay, no, I want to stick with the Submariner because I like how you set me up here. But the other part is are we paying attention to today's prices, or are we just saying what's in 20 years? What do you want?
No, today. So you're buying it today, but say you're going to spend an equal dollar amount.
Right. Okay. Gotcha.
Right.
And fuck, marry, kill. Oh man. I'm gonna go fuck your Charizard card, and but this is gonna be.
Do you mean like fuck it, like go fuck yourself, or like because this fuck, marry, kill? Like I want to make sure we are using the term correctly.
Yes. I'm gonna fornicate with your Charizard card.
Okay, interesting. All right.
All right, here's why. It's a little bit of strikes and gutters on this one though. This is based on relative value to the other three when I get to it. But otherwise, like your Charizard card, you can just go beat it, nerd. I have no care about your Pokemon card. I know this is a personal vendetta for you. This is a deep cut. For those who've been following Pirates for a long time, you're gonna know about Corey's own personal relationship with Charizard cards, which is why he brought it up. But I'm giving you a little bit of a shot out there in that say, I'll fuck your Charizard card. I'm going to marry the punk just for nostalgia's sake of the internet, just for you know, just for the love of the game. And this is why I'm gonna throw you off. Yeah, because I'm gonna kill your roll-up Submariner because I hate Rolexes. If you would went any other watch brand, this is why I know you set me up. Because I do not understand the value of Rolexes. I don't mind them aesthetically. They're just not that interesting to me. But the amount of volume of Rolexes that are made and then they convince the public that they're somehow rare is mind-boggling to me.
Yeah.
All right. Even though if I'm being rational, in 20 years, if you go Lindy effects, it should be the Rolex Submariner. I get it, blah, blah, blah. But we're trying to have a little fun here. So over to you.
This is a tough one. So by the way, the Charizard card only came up because I was like, thinking back to the meme stock era of ridiculous buys, and someone paid $499,000 for a mint condition first generation Charizard holographic Pokemon card. Like for whatever reason, Pokemon cards got wild again.
Was that Logan Paul or did he buy it later?
I don't know. I don't know who it was. It was some eBay auction, and I just saw another one just went for sale for like $39,000. Right. So down over 90% on your quote unquote investment from 2 years ago. So I of course tweeted that it was a great value buy because price is value. So here's my thinking on it. I think the Rolex is the Mary, right? I am very confident that if you buy a Rolex Submariner today, leave it in the box, keep it immaculate, don't touch it for 20 years, it will probably retain its value pretty well. Particularly in mint condition, right? So that's like to me the steady, it's what you marry. I would, God, this is a tough one. So the way I'm sort of interpreting this is like kill is like, this is just a bad idea. Like you wouldn't touch this. This is the no-brainer versus fuck is sort of the, this could be a sexy trade if it goes the right way, right? It could go one way or the other. It might risk it. Or you might get STDs. It's hard to say. So I think the Charizard card you kill.
Oh,
I think you kill it.
Is this because you're angry about your brother? Is this a family issue? Do we need to have you lay down for this segment?
So this is tough for me because I do think over 25 years, the number of first edition holographics in mint condition is just going to continue to dwindle, right? Whereas I think the number of crypto punks, like I do think over time, just some will get lost, some will get stolen, wallet things happen. But I think the supply will remain much higher than the Charizard Pokemon card. But also the number of people who want the Pokemon card, you're talking about it's probably the millennial generation who wants to show off to other nerds. And it's like just the number of people that are willing to buy that. You're talking about a super illiquid OTC market.
Yeah, but how do you think about related to that is like what came up, in the last few years, basically people of my generation or age, that grew up with a poster of like a Ferrari Testarossa or a Porsche 911 on the wall, like whatever one is like now that they get in their like 40s and 50s, that's what they're spending money in, those skyrocketed in price because people love nostalgia. So how much for like
they love nostalgia, but they love showing off their nostalgia. Like, what are you going to do? Like gold plate your Charizard card and wear it around your neck? Like, oh, Darren in the chat. Welcome, Darren.
DJ in the chat for once. He's actually listening in real time, or it's fake news. But by the way, before you keep going here, my favorite by far is Bacon Memes said, imagine some regulator watching this.
Yeah.
We're not talking about markets. We are
talking about markets. It's
I guess we are.
Yeah. So I sort of look at the Charizard card as I go. I just think like there could be a hit there, but you're talking about such an illiquid market. Like I just find the downside is much more guaranteed to me. I think crypto punks, there's a chance Yuga does more with them in 20 years. Again, the whole blockchain thing could go to zero. But I think they probably stick around and probably could continue to accrue value, right? And I know this sounds insane, but to anyone who grew up playing massively multiplayer online RPGs, these sort of digital tokens have very real world value for the same reason like your nice watch has value. People just like to show off their wealth. And the more time people spend online, it's just a digital flex. And I remember playing this game called RuneScape back in the early 2000s. And the big thing were these things called party hats that were given away at one event on a New Year's. Those party hats are still around, and the supply constantly dwindles because they get lost. And the value of those has gone up an unbelievable amount. It's still the most sought after item in the game, and it does nothing for you. It's purely aesthetic. I think CryptoPunks are sort of the same way. It's just like a purely aesthetic flex for the digital world. And the more you can use it on Twitter and Instagram and all around these other social profiles that I can't even imagine will continue to come out over the next 20 years, I think there's a chance that could be a big trade. Now, again, these are very healthily valued assets. I use collectibles. I mean, CryptoPunks are very expensive. But, so is a Rolex compared to a Timex. So who knows?
My favorite too is this is gonna be Darren's first time in like the comment section with the Booty Crew. So I'm so excited to see what he's gonna text us afterwards.
All right. So that was fuck, marry, kill. I kind of like this. But maybe how we've talked about doing drafts.
Yeah.
Maybe fuck, marry, kill is our version of a draft. This is what we're gonna do every week. Yeah,
we got to think of maybe we'll change it up with the pirate thing. I put my thinking cap on with that one, but I didn't want to be a cliche. When you were talking about your par cooked, soon to be future son, I was going Patek Philippe. Like if you're gonna go anywhere, but that's why you throwing in the Rolex Submariner. That threw off my triumvirate there and what my
So this is what I've been thinking about, right? If I were to buy a Patek, which is they're just so expensive.
Yeah.
Would I want to put a Patek in a safe for 20 years and give to my kid? No, my kid should not be inheriting a Patek from me unless I wear that Patek for 45 years and then I die and he takes it off my cold, dead wrist, right? Versus like what I was looking at was something like what I was actually thinking about, what sort of inspired all this was like, what's a nice dress watch that would be really cool to buy during his birth month that 25 years from now, I could pull out of a safe and give to him as his first dress watch that isn't so expensive, right? So I was sort of like a nice Breitling, right? Or a nice, I don't know, something sort of like not like a $20,000 Rolex, but like a $5,000 Breitling to me is a great first dress watch. And if he doesn't care about watches in 25 years, like I don't feel like it's like, okay, I took a gamble and it didn't work, but it was a gift from dad, Whereas the Patek, it's like, oh my God, no kid should inherit that.
But and related to that, what my family does a lot of, whether it's on birthdays or even on when people are born, is like we get alcohol that is like in that birth year, right? Whether it's a port, a whiskey, a wine, going back, like on your 30th birthday or whatever, you crack one of those open. Like it's always a unique or nostalgic or like a little bit of a sentimental experience. So are you buying like some Foursquare rums or something, or like what would you like based on his birth year?
Yeah, I mean as you could do that, but as you and I know, like rum doesn't get better in the bottle.
Yeah.
Right. So it's not like wine, which in theory ages over time. First of all, I don't like wine. I know that's a rare thing. I don't care for wine. So I had a bunch of people be like, "Oh, you should buy a bottle of wine." I'm like, "No, I don't think I'm gonna. It's not my thing."
Do you realize on paper, if we put down our likes and dislikes, people will be like, "These two hate each other."
Yeah, that's true. But also, I was thinking about the wine thing. I'm like, I could keep a watch in a safe with me wherever I go. Like, I'm trying to imagine me over the next 20 years lugging around a bottle of wine. Like, I would just destroy it. It wouldn't be stored properly. The whole thing would be a disaster. So wine was out, but I was thinking about liquor. But so much of the liquor, it's like, okay, so who cares if I bought him a bottle of liquor when he was born? Just like it aging doesn't, like it being vintage doesn't really mean anything at that point.
What you should do, and this is, as this show is, not investment advice, You just buy him some timberlands, right? That then they can harvest the trees and like on his like 18-year-old birthday, and then he's got a nice investment for himself.
I'm gonna buy him a Christmas tree farm. That's what I'm gonna do. All right, so I want to stay on this. I want to stay on this NFT topic, and I know everyone in the audience loves it when we talk about NFTs, but this is actually related to business. So the Proof Collective had their. This is Kevin Rose's project of Dig fame. Had their Q1 update yesterday, 2 days ago. I sent it to you. I'm not sure if you got a chance to watch. It was pretty long. So they had sort of two big projects that they run. One is called the Proof Collective, and it's a limited edition NFT that gives you token gated access to their community Discord. It's for art collectors. They brought in artists. It was sort of meant to bootstrap this community. They used the initial sale proceeds to help them get better cameras and better mics for the podcast they were running, host events. They eventually then launched this second tier project called Moonbirds, which are sort of pixelated owls. That's the profile picture, and it's I think it's 10,000 in the collection or thereabout. And Moonbirds went from like whatever 1 ETH up to 30 ETH, and then have been back down to about 6 ETH during the bull market and then crash of NFTs lately. I bring all this up only because like part of what's happened with them is there's been a real big lack or miscommunication among the founders of the project and what these Moonbirds are supposed to be. All the people who sort of started buying Moonbirds were speculative NFT flippers, and they really put their fist down during this communication about Q1 and saying, no, this is supposed to be the profile picture for the art collectors in the NFT world. Like, we really care about collecting art. That's what we're trying to do. Value that accrues to you is through the artists we bring you and the connection, all these cool projects we bring your way. It's not about just like token dropping on you. It's not about, another coin that we're going to launch the way Yuga's done it. And the floor price did not react too well. I think during the presentation, it went from like 7 ETH down to 6 ETH. Like, people were like, this is not the project for us. The reason I bring this up is because a lot of like what they talked about was the insane amount of work that it took for them. Like, when they launched the Proof, the amount of hiring up they had to do to create the website, community manage Discord, create all the content, schedule guests, build out these websites that could interact with their NFT to give the token gated, community art projects, make them available, partnerships that they struck. And it made me think, Jason, as much as I strive to be a yes and person, you have talked a lot about doing some sort of limited edition Pirates of Finance NFT that would create a token gated community and in many ways be like a Proof Collective pass. And I listened to this and I went, holy shit, neither of us have time for this.
But how do you think though? Like, isn't it though when they raised as much money as Proof Card did, and then eventually Moonbirds? How much is like the Lady Doth protest? Too much is like they start putting in. By the way, I did see Sean's comment, and he's obviously going to write on that. I'm going to try not to, but they put all this? They made so much money on those mints. It's like, don't you think then you have to like put a long bullet point list together of all the things you're going to do with that money to make it sure like it looks like you're working hard for that money? Like, that's what I think of when I think about that list. It's like, oh, we had to buy cameras and mics for our podcast. No, you could have bought those yourself. Like, we had to hire an editor. Like, all of those things that like are on that list is like, it's not that much work, but also at the same point, yes, this is a full-time job. Now, what I think is interesting about it that you're kind of hinting at is if you are, and shout out to Kevin Rose for doing this, is like, if you are going to launch an NFT project like that, you better be willing to dedicate like the next several decades of your life, or not the rest of your life. Like, to do it properly, that's what you're doing. You're putting your reputational risk online. That's why those people are hopefully buying in a lot of times. Or, eventually you want to build the community around it, and then it becomes about the community. But the initial impetus is based on, what are, these people going to, are they going to believe in you? And are you going to produce for the next few decades? So that's
what I thought. Yeah, on that point, what I thought was interesting was their Proof Collective, their initial pass. They said when they launched it, this is through 2025. We are free to quit after 2025. And that going into buying it, which I thought was sort of an interesting like commitment. They didn't do that with Moonbirds. Now they're saying the Proof Collective pass will actually convert into something I think they're calling Moonbird Elders, or who gives a shit. But the point was, I thought it was an interesting model of like when they did the initial proof pass, that was really just meant to be, hey, you have access to this community Discord and everything we're doing. It was very much like, this group we are putting a time limit on this so that we can, if this is not working, walk away from it. But you do see like people who launch NFTs, there's sort of like two directions they go. One, there's no roadmap and it's pure like speculative flipping. If they have a roadmap though, and they don't deliver on the roadmap, they are subject sometimes to legal scrutiny. You have seen that with some projects where they promise to do all this stuff and then they don't fulfill it, and it looks like a complete scam. They never had any intention, and you do see law enforcement go after them. So I think you have to be careful with these NFT projects as to what you're promising. But it made me think of like us, right? I'm 99% sure most listeners probably to us don't even have crypto. Like I think we skew traditional finance, and people may not even buy NFTs and that sort of stuff. But if we created a Pirates Pass, I was thinking about stuff like, okay, so the initial raise, what does that allow us to do? Well, you and I reinvest in things like marketing and stuff for the show, getting all the clips done, that sort of stuff helps grow the show. You can do all sorts of token gated community stuff, both digitally, like, as well as you could have some sort of like token gated event where we could bring in people from our network to do, talks and all sorts of stuff about finance. It enables us to do like physical airdrops, like, we create some rum, and hey, if you have a token, you can just go redeem, put in your mailing address, and it gets shipped to you, assuming you're over 21, right? So there's all sorts of cool stuff that can be done using that sort of digital token. And then if people decide they no longer want to be a part of it, they can try to sell it. But man, I listened to this because I want to yes and you. I want to say, yeah, let's do it. But I listened to this Q1 thing, and candidly, it scared the shit out of me.
Oh, I'm sure it did. But like part of that though, that's kind of the pros and cons of NFTs, right? It's just kind of a catch-all, and everybody's figuring it out as they go. So like you said, the people that put out roadmaps but then didn't adhere to their roadmap, now they have consequences for that. So then you see people stop putting out roadmaps, right? And everything's kind of like surprise and delight because of that. And then same thing with Moonbirds as they're pivoting, is because the idea is this is almost like we talk about the term hedge fund or LLC. It's just a catch-all, and that's kind of both the pros and cons of NFTs. Like it can kind of be a little bit of anything or everything, and so that's both good and bad. And so that's why people pivoting over time. But it does, as you know, my favorite part by far is the idea of token gated commerce. I think it's really interesting, and I think that's going to be really a future event. Like, for example, a lot of people don't know is like when you go to book like any sort of flight or anything, and you're trying to find the cheapest ones on Google Flights or whatever it is if it's behind a paywall, you can usually get 10 to 20% off the cheapest flight you can find. They'll do special deals for that. So as long as it's behind a paywall, so you could use your token gated commerce with like your NFT is like, well, so another thing that collective group gets is like access to cheaper airfare. We've talked about it before many times, is like what I'm always in the back of my mind or on a back burner is like, how do I aggregate a lot of entrepreneurs to get better insurance costs? I know like, Buffett and Bezos tried to do it at size, but it's another thing. Like, can we as an aggregate collective be able to get better health insurance costs for individuals and entrepreneurs trying to, go out there and make it instead of paying on their own? So I think there's a lot of little things that opens up, whether it's, drops, like whether, I think it was Louis Vuitton and Super Plastic that did the drop, where it's like it opened up a whole new store for you. You get limited edition things, you get things at a discount. It can be like, and then in the future, it'll obviously all be on your phone for this, token gated commerce. And when you walk into any like restaurant or wherever, thing, it could be automatically offering, it unlocks like a discount code for that collective. So I don't know, it's still nebulous and it's still far off. And I agree with you. There's a lot of risk and a lot of reasons not to do it. But as an entrepreneur in general, it gets me excited for like the potential possibilities, because it opens up a lot of really interesting things, like whether historically, this is outside of the NFT space, but historically we've had either stocks or bonds. But with blockchain technology, you can do programmable money. You can really blend the things between stocks and bonds and converts and everything. So it's just still Wild West, but just really gets the wheels spinning on the creative front, which is both a good and bad thing.
I was thinking a lot about taking, like, what happens if you take the Kickstarter model, right? And now all your pledges become liquid tokens, right? So you say, I want to buy this, I want to pledge to this project, and I'm the first tier. and that becomes, you know, an NFT. There's different types of NFTs, but so like you become a tier 1 in the project, and then a year later, if they haven't delivered, well, you might be able to exit at 50%. Like someone else goes, okay, I want in. I still think they're going to deliver, and you go, you know,
Right.
I don't think they're going to deliver. I'm out, and make a market around it. Enable the liquidity, right? Allow people to access a secondary market. I think there's really interesting stuff that can be done there. Talking about token gated commerce, though, I sent you what I thought you would really like was a sort of a boutique craftsman who created a line of sweaters and hats called Tiger Bob. So tigerbob.store. I sent it to you. I was like, look at how sick these sweaters are. And it was tied to Web3. So people who bought the token got early access and a discount. You sent it to someone, and I loved their response, which was, oh, good. If I have the NFT, I can get 10%, bringing the cost of the sweater down to just under $700. Quite the steal. I'm like, okay, fair point. Like the whole thing is kind of ridiculous when you're talking about a $700 sweater. Like, what's a 10% discount when you're paying that much? But I think the interesting point is there's a whole aspect of commerce now that can be tied to drops that are for specific loyal community members, right? Your local coffee shop punch card can now go on chain. And you want to know what? If Nike sees that someone is a super loyal Adidas person, they can see that on the blockchain. How can they try to poach that person, right, and make them a Nike person? So I think there's all sorts of really cool, interesting stuff that could happen over the next decade, which is, again, why I would fuck the CryptoPunk.
And then why do you think, though, that like people get so upset about NFT projects, but people are happy to be part of Patreons? But it's kind of, to me, it's relatively similar, but like you have more opportunities and interesting things you could do with an NFT than you could do with a Patreon.
I don't know. People
but also to your
who just hate crypto, because there's a lot of grifts. There are a lot of like, why are you paying $30,000 for the picture of a penguin? I get that. Like, sometimes the whole thing seems ridiculous and it's probably overpriced. And like, again, why does a CryptoPunk go for $100,000? Why does any art go for as much as it does? Like, there's clear tastemakers, society, a group of collectors has decided something is worth something, and they all bid against each other. Jason, someone very smart that I know once said, we're all just sitting around entertaining each other.
I'll see which one of us is going to slide it in. Yeah.
Right. Just because there is no way I would ever pay any amount of, well, I take that back, not any amount of money, but like you look at like Monet's and all that fine art, I'm like, I just would not pay as much as it goes for. Or the only way I would pay is knowing that there's other people who are going to buy it from me at some point, that the liquidity is there. But if you said, like, there are people who would say, oh, I would buy that even if no one were ever buying it after me. And I'm like, I don't know what the value of art is. And so like the only way I can say the value of art is if there's a market. And you want, there's a market for NFTs. So as long as the liquidity is there, you know, the people keep dancing.
Well, the other things, as you know, I'm excited about, besides token gated commerce, is the idea of eventually when these are securitized tokens, is then the community in general can invest in projects that they all collectively believe in, and they can create royalty streams and everything. And I was saying how, like, it reminds me, like, you know, going back, the circular nature of it is like, I don't know why people are not, you know, distributing part of their revenue to like their community. I mean, people, like, you know, are just trying to use their community to make more money. It's like you should be giving back and distributing, but also it creates circularity. It's like, you know, that's why Henry Ford paid his workers more, because then they could buy his cars. You know, it creates these circular economies that we've kind of talked about before. So I don't know quite how that works yet, but we'll see in the future.
Yeah, I'm not sure the Gensler SEC is super friendly to that idea right now.
No, you'd have to go through, that's what I'm saying, you know, you got to go through the whole securitization process, and maybe we'll get into that in NFTs a little bit about like how much that actually costs and how onerous then those regulations are. But I think what you're really saying that scares the shit out of you is essentially you're tokenizing Corey Hofstein, right? And that's what's scary as shit, is basically people are buying into you like a VC fund, right? Like let's say if Corey creates an NFT, you're basically, that's your bet, is like you're now the product, right? And I want to like I'm betting on you. It's not so much
on the product. It's like, it's very, it's producing. It's going, okay, like I'm buying this because I think Corey and Jason can deliver me value. And I think there's a lot of fun things we could do. Like I was thinking, okay, you know, we could do our good friend Shannon, who runs the Collective, right? Does these super exclusive events that many people who buy our NFT might never be able to experience. But wouldn't it be cool if we basically bought a seat in the collective using the proceeds, and then we're able to take a new member of the community to every one of these events? Like, that sort of stuff to me is a really cool door opener we can do that I think really does deliver value. But again, it is a lot of work, and you and I already work a lot. I mean, the fact that you didn't even come to this show prepared, Jason.
What? I prepare diligently for every episode. And speaking of like how much we work or don't work, as far as that's concerned, is as part of the work that we do for you is we're pirates here, and it's the pirate pinky promise. Like, we're here working for you guys, putting out this, I would say, mildly entertaining content, but today might be negatively entertaining. You maybe this is subtracting from your life.
This far.
But part of the Pirates Pinky Promise is like, we're putting out all this content every Friday live at 3 Eastern. All we ask in return is you like, subscribe, maybe turn on those notifications so you don't miss any of those live episodes. Look at our boy Darren Johnson in here today during the live event. He gets to see all the chat with the Booty Crew. Let's be honest, the Booty Crew is even more entertaining than we are. So that's the whole point of coming on live. If you turn on those notifications, you don't miss the live. You get to see all of the great jokes and humor in the chat room, which is much more entertaining than Corey and I could ever be. But that's the Pirates Pinky Promise. I mean, also, wouldn't hurt you maybe to share a clip on social media. Tell your friends. Maybe burn this onto a CD and pass it along around your neighborhood. Put it in all their mailboxes. Who knows? I'm just spitballing here. Just a boomer spitballing. But anyway, that's our Pirate Pinky Promise. We're happy to produce this content. It's not going to cost you a pinky. It's just between you and us, it's that Pirates Pinky Promise agreement, the PPP, if you will.
Yeah, PPP loans coming soon. Two thoughts come to mind, Jason. You talk about sharing clips. Is this show too embarrassing to admit you listen to share? That's a serious question. Do people actually want other people knowing they listen to this show?
Oh my God. I literally had a conversation last night about compliance and why this guy couldn't do a podcast because his compliance would never put it through. And I gave him some reference points of things we talked about, like asshole antennas, like the fuck, marry, kill with the Charizard card. No, I'd definitely fornicate that card. Yeah, this is one of those embarrassing. It's like what do they call that? Wait, what's the pleasure, like the guilty pleasure or something? Or like, do you have to watch this in a dark room by yourself? I mean, what is that where you're going with?
Yeah, take a shower after you watch it, right? Just wipe off the grossness. I had a second thought, but it's escaped me. So I'm gonna pivot. I'm gonna pivot here because you talk about securitization brings me to a topic you and I have long debated privately. Is it better to live in the hedge fund side of the world, or is it better to live in the 40 Act, the mutual fund and ETF side of the world? I, as someone who lives in the mutual fund 1940 Act side with ETFs and mutual funds, I always say, damn, hedge funds seem pretty sweet. And you, as someone who lives in the hedge fund side, look over at my side of the fence and you say, man, those ETFs, those look tasty. And I go, you have no idea what you're talking about, my man. This is a horrible business. You're the one with the great business. And then you tell me all the shit you go through. And I think we both agree that in many ways it sucks all around. But grass is always greener, except I think you walked away from this week, finally maybe with your held head up high going, you want to know what? ETFs do suck more than what I do. I want you to talk about that.
First of all, grass is greener. It does beg the question, though, Corey. But
never begs the question.
It's perfect of why you can't share this. Shout out to Dennis Dadvet in the chat wrote, quote, just a boomer spitballing here. God, that has to be code for something. Yeah. Everything. Dennis coming in with the heat on that one.
You're 100% getting demonetized.
Yeah. Well, yeah. By the way, we appreciate our sponsor from Liquid Death that never gets put on here, but love the water. I'm sure it comes from a great Austrian tap. Yeah, just add bubbles and some great artwork. I don't appreciate you taking a victory lap here. I mean, I think you about broke your arm patting yourself on the back on this one because you have been telling me this for a long time.
Hold on. But this is me patting myself on the back despite the fact I've dedicated my life to it. So it's like one of those, like, I how much it's like, good job, Corey, you moron.
Yeah, well, that's usually part of our conversation because, and I'll make it public. So just to embarrass you, is like you're the smartest, most well-respected person across all sectors of our industry, and yet you work in a space where you make negative money. Like I'm always trying to get you over to this dark world of hedge funds so that you can actually make a living, but that's part of it. So you want to debate that?
I make more than negative money. Thank you.
I don't know what I learned about the ETF industry this week. I don't think any of you guys make money, but the other side of it, and this is gonna be a sweet chef's kiss for me with Sean Weiland here. You know, a good part of me, if not all of me, is a pure communist socialist, and that's why I love the ETF industry. Is like I want to produce things. I want to bring institutional quality portfolio construction down to non-accredited retail. And that's what always gets me excited about it. And that's what makes me want to jump through the hoops and deal with all the headaches. So it's more about the product creation and bringing something in the market that doesn't exist that excites me. But then, to your point, I start going through all the economics and I'm like, there's no way to make money on this. Like the only way you start to make money is if you get into the billions. And I would argue almost like getting closer to double-digit billions. And then those tiny little bits you're carving off finally add up to something after you pay all the regulators, you pay off the vendors and everything. And that's why I was saying, like from a startup perspective, you would have to raise so much money to make this work, to give yourself enough runway for a few years. And I hate like having to raise money. I'd prefer bootstrapping. And then eventually maybe you get to like, you get lucky and you get to a few $100 million. Well, you're running probably, negative or deficit financing. So you got to get to a few billion. Oh, now you're at break even. And then you have to get to tens of billions. And it's like to shoot the lights out, like to do that, like the impossibility of that, the probabilities of you getting to like billions of dollars in AUM on your ETF. I mean, everybody of course thinks they can, but like that's the only point it starts to get profitable. And then everybody comes to you and go, yeah, but Vanguard charges 3 bips and you're charging me like 39 bips. And like, so there's just no winning there. And it's just, and there's a lot of just Me Too products in the industry. So then it comes about marketing spend and can I out market these other people because everybody's putting out the same crap? Like it's just a never-ending vicious cycle, and I just got more and more discouraged listening to like all this different aspects of the ETF industry and all the costs associated with it.
Yeah, and I think to continue on that, right? So just to give some context, so you launch an ETF, assume the launch cost is somewhere between $75,000 to $100,000 in legal and startup costs just to get the thing out the door, and then you're probably paying around 200 to 250 grand a year. Again, depending on how much scale you have. Is it a shared trust? Are you running your own trust? What are the operations like? How complex is it? Do you have a Cayman sub? What's the auditor situation like? All that stuff, right? But if you're, if you're only charging 10 bips as a unitary fee on the product, and need to pay 250 grand a year in expenses, like you can figure out the break even pretty easily, and it's pretty damn high, right?
But it's not that. Can you talk about the one thing, I found out those things before, but other things you taught me that I was kind of surprised by is you have like a board of directors and reserves. And is that a regulatory function too? You have to have a certain amount of reserves. So you need to raise capital, even to just sit there and hold in cash and reserves for like somebody's auditing your business and the board of directors. Like, is that across the board?
So you talk about, right? So the benefit of going to a 40 Act vehicle, a registered investment company like a mutual fund or an ETF, is that you can get non-accredited investors to invest with you. To make that okay, there are a huge amount of regulations you need to comply with, and there's a board that oversees the registered investment company who will, as an advisor or a sub-advisor, make you fill out what's called a 15C. And every year you're basically going to the board, telling them about the business, how the fund did, and they're reviewing your stability as an asset manager. So one of the things they want to make sure is you're on the hook for the expenses. Do you have enough capital on your balance sheet? What's your revenue like? Are you running out of money that's going to cause this company to go belly up that you can't afford the expenses? That's something they keep their eye on. How much runway do you really have with this product? So yeah, I mean, in many ways, you got to keep a bunch of cash on the balance sheet if you're not at break even to prove to them you got a multi-year runway to get to break even. Once you're at break even and it's growing, right, they don't need to see that balance sheet as much. But if you're launching a new product, you need a healthy balance sheet for sure. And I would argue you probably need several years of runway. So, you either need to prove you have the revenue to offset the losses, or you need right? 500,000 to $1 million just sitting on your balance sheet.
Let me interrupt you for a second here, because this is one of the ones that's actually come up a lot for me this week when, people call both you and I up a lot of times to run their business plan by us or their marketing plan, or to get help with their marketing plan or their pitch decks or whatever it is. And the whole idea of like, if you build it, they will come, or like, I'm a great trader, I have a great track record, so automatically money's going to flow into me, and they don't have a marketing plan. We're like, that is never, ever going to work. And it's dramatically underestimating. It's like the smallest part of our business is actually like the trading or the portfolio construction. The biggest part of our business is like, can you run an actual business? Most people don't have the chops to actually run the business of running an investment business is much harder than the trading side of it. And then more importantly, like, what is your actual marketing plan? Because it's almost like, I think of two analogies is like when authors think, oh, I'll just sign with a publisher and they'll take care of everything. No, they don't do any marketing for you. The marketing plan is still on you. Similarly, like the stereotypical one is people are like, oh, I'm a great home cook, I'll start a restaurant. It's like, that's not how life works. Like, you need to be able to run a business. You need to have a marketing plan. And so you're talking about the years down the road. I had a firm, mutual friends came to me this week, and they were kind of talking about like, well, kind of what their roadmap and runway was. And I was like, 4 years minimum. And that's luck. And they're like, what? I'm like, in especially in the hedge fund space, if you want institutional allocations, you're going to need a minimum of a 2-year track record, a minimum of probably 100 million assets under management. And then the institutions will start looking at you, and they have a 1.5 to 2 year sales cycles. So in a best case scenario, you're talking 4 years before you start making any money or getting any sizable allocations. Sorry for that interlude, but like that kind of stuff drives me nuts. It's like everybody just thinks you launch it and you're just Scrooge McDuck, diving into your coins.
I think you hit the nail on the head. The way I always think about it is investment management is different than asset management. Your asset management company has an investment management component. Like, you need, like, that is table stakes though. Then you need to figure out the marketing and the sales and the distribution and platform access. To the point about hedge funds versus mutual funds and ETFs, like when you launch an ETF, it's available at Fidelity, Schwab, TD, Pershing. It's not available at UBS, Morgan Stanley, Goldman Sachs. It's not available at LPL or Raymond James or the big independent broker dealers. You have to get it up to a certain size, and then you have to go interact with the gatekeepers, and then you have to start stroking checks, and then you have to go through the due diligence process. Like, that's a key accounts is a huge part of managing that, so that people can get access.
And I'll say the thing you won't say. I will say the thing we won't say on those platforms too. To me, they charge extortion. They call it like data fees and everything, but you have to pay to get on these platforms. It's pay to play. And then on the platforms, like you said, I was just talking to some people lately. It's got even worse, where they want 50 to 100 million day one on their platform. Do you know how hard that is? Like, that's impossible. Like, if you're trying to get on 5 or 6 platforms and you're supposed to put it on their platform day one, like, they're just making it harder and harder.
Yeah. The other side too that I think is interesting is when you run a hedge fund, the returns are only as public kind as you want them to be, right? When you run a 40 Act vehicle, they are public every day. When you run an ETF, right, you're not striking NAV, like you are striking NAV, but what most people are looking at is price. And so what happens is very early days, market makers are only quoting so much. So think about it this way. Market makers are a hugely important part of the ETF ecosystem. Most of the time when you buy and sell on the exchange, you're buying and selling from the market maker. Especially in a new ETF, almost predominantly you're buying and selling from the market maker. But if there's only like, say, $500,000 of volume every day, the market maker is not going to create $10 million of depth in the book, right? That's a waste of their assets. That there's a cost of capital for them. So they're only going to put maybe 250,000, 100,000 up at a time. And then as volume comes in, they'll recycle money throughout the day. So if you're not a super sophisticated investor and you're not thinking and you go, wow, this ETF looks great, I'm going to buy $10 million worth, and you throw a market order in when the book depth is $100,000, it doesn't matter how liquid the underlying are. You're all of a sudden going to print 7% above NAV. So you launch a new ETF. It should be super liquid. Someone goes and does a really dumb trade, and now all of a sudden, permanently in your performance, you've got this super hairy candle, right? Someone got a really bad fill, and then people start to ask you, well, it looks like your ETF is illiquid. Like, how come it's not? Now I'm concerned about buying and selling and exiting for my clients When in reality, if someone did it intelligently, it wouldn't be an issue. But if someone does it in a way that they're just not thoughtful about it, yeah, you can get your face ripped off in a less liquid ETF. So, and none of that applies. It doesn't apply to the mutual fund side, doesn't apply to the hedge fund side very easily. Like, it's just there are all these other issues that pop up in the ETF that just make it a difficult vehicle to be successful with as a boutique.
Several things on that. One, thankfully it stopped again, but it wouldn't be a Pirates episode if your microphone wasn't popcorning in a little bit. But like, it's kind of going in and out, so don't unplug it yet because I don't want to even mess it up. Two, this is so perfect. Booty Cruise. Sean said in the comments, I thought I deleted stroking checks from my browser history. But then I want to shout out for Murph in here. Appreciate this comment. This is so true. Like our industry, this is a great example. Was that a $1 billion boutique manager with big seed, and it took 4 years to get to client number 2. At first needed a 3-year track record, then no one wanted to be the second client. Like, you've drawn this great diagram for me many times. It's like, oh, I'm too late, I don't want to invest, I missed it. Or I'm too early, I don't want to invest. It's I'm gonna wait to see when it's too late, then like get that investment. And so that's what people don't realize, how often that happens. Then the worst thing in my side of the world is institutional allocators come in and go, well, our minimum check size is $100 million, but we can't be more than like 5% of your fund. And you're like,
I don't get that. I don't understand that at all. I just had this argument. Look, there are reasons that, like, if you're a fund trying to buy another fund, if you're a mutual fund trying to buy an ETF, there is a certain limitation. If you go over 3 or 5%, you need to start filing and let people know. There are concerns about regulatory ownership. But if you're like an advisor or an institution allocating capital, I don't understand why you give a shit. The only good excuse I heard, and I actually heard this from someone this week when I was talking to them, said, look, I don't want to be a big part of your fund because I don't want to hold your career risk in my hands. Like, if I just had to exit the fund for some reason, I don't want to remove 90% of the assets. I can appreciate that. That is just a personal relationship thing. But when people try to make excuses of like, oh, it's prudent for the investors, or it's a liquidity issue, or whatever, it's like, everything I'm trading is hyper liquid. Like, you could go to the market makers right now and get a quote, two-way quote for $100 million. And I guarantee it would be tight. Right. So like, this whole bullshit about I can only be 5%, to me, it's a big optics thing, but like, they make it seem like it's an operational thing.
Right. And like you said, I would agree with him as like illiquid PE investments or something like that. Then I agree. But like, when we're trading highly liquid stuff that's like has, like can be liquid in seconds, it doesn't make any sense at all. It's like when you go to get your first job, it's like, we only hire people with experience, and you're like, how do I get experience if you won't give me a job? Right, by the way, I don't want to blow up your spot, but I forgot to tell you, behind your back, some people are telling me you got some great market makers on stuff you're doing that we can't talk about, that like they were impressed with how they're making your market. So, but like you were saying, you have to create those relationships. And if I could sum up everything I've learned about ETFs, is like the multiple levels of reach arounds you have to give to run an ETF is just anathema to me as an entrepreneur. And I can't stand these other people controlling my destiny like that.
So here's a perfect example of like with the relationships game. I met someone 10 years ago when they were at Knight. And you remember the old market maker Knight, who had the whole blow up situation. I think they lost $400 million in a day. They got merged with Gecko, became KCG, ended up being bought by Virtu. This person ended up leaving and going to another market maker. For a fund I recently launched, I knew that they happened to be pretty good in the space. So we have a lead market maker that is not them. And I called them and I said, hey, I'm just looking to add some depth to my screen. I know it's been a decade. We've never found a way to work together. Do you guys think you'd be interested in being a second market maker on the fund? Less than a week later, our bid ask compressed by like 50% because we had a second competitive market maker. That was a 10-year relationship that finally there was something, just being friendly, having drinks, catching up, never found a way to work together. And then it was like, just the trust was built. I put it across the desk. It was like, hey, you want to make markets on this? This is what we're trying to grow. And they turned it on within a week. It was phenomenal. But yeah, it's a big relationship game. You need to know people. When you're starting the fund, you need to get seed. Like, all that stuff is very, very hard and very relationship driven.
Yeah, part of it too, I want to go back to what you said too. I appreciate the allocator that said they didn't want to take your career risk in their hands, and if they had to pull from you. But that's what I always argue with my other hedge fund manager friends, is they all want these big check sizes because everybody hates, marketing and sales. But then they now have an 800-pound gorilla. And to your point, if they pull from them, now they have to fire all their staff, and they might even have to shut down. And it's just shocking to me, like how many people in our industry do that. And like, if say they're running a $500 million fund and 400 million is from one allocator, well, they hold your entire business in their hands. And then obviously you're bending over backwards for everything they do. Where like, we built our firm specifically that we could take out, we have hundreds of investors. And quite frankly, if, a few dozen of them watch this show, they're likely to pull money from us, but that's okay because we have hundreds more behind it. But that's the idea. It's like, you don't want one person to control your destiny like that, but it's shocking how frequently that happens in hedge fund space.
Yeah, there's this desire to go elephant hunting because it just feels really good to get a big check in the door suddenly.
Right.
It's because it's like, okay, I can get 20 people to give me $1 million, but if I can get one person to give me 20 million, like, oh, that just makes life easy. Now it'd be better if I can get 20 people to give me 20 million, but sometimes you just want that big one check because it's like it takes a lot of work off. But you're right, you then become beholden to that large person, and there's huge amounts of career risk there. I mean, I've told this story a number of times to you, at least. I don't know if I've told it on Pirates, but I had a massive client that got acquired by Goldman, and Goldman fired every manager on the platform that was in my category. And I watched $700 million plus walk out the door with one phone call.
What does that sound like? What does that sound like in your head? Is that like a whoosh? Is that like a or is that like a just redlining just?
Well, you couldn't hear anything over my sobbing, so I have no idea what it sounds like in my head. It was just like violent, like snorting, like it was bad, begging them to come back. Like when you have really bad, ugly breakup. Like, oh, please don't leave me. I'll do anything. I'll change.
I'm so glad that like YouTube wasn't around like when I was a teenager, because I was thinking about those bad breakups, and like maybe you make a mixtape or a bad breakup song and you're like, please come back to me, like, and then that would be like on the internet forever.
Dude, it was bad enough doing it in your AOL Instant Messenger away profile, like the super coded, like the only one person's gonna get this, and everyone's like, we all know what you're talking about. Like this is very obvious. Yeah.
But then again, if we believe the movies, I mean that's what sparked Zuck's whole career, So maybe that's how it works. Do you have any? We only have a few minutes left. Do you have anything else you want to touch on? But all this market talk that we normally do on every episode.
No, I've got nothing.
Conference.
I went through everything.
So remember, we recorded it. We recorded the best episode of Pirate, and maybe the best podcast episode that's ever been recorded when we were in Miami together. But due to technical difficulties, we can't release it. But on that episode, we talked about our conference hacks. But you and I were talking about right before we hit record. I'm still racking my brain. Is there a way to do some sort of cool unconference meetup in our space? Like, there's got to be a way, but I just still haven't seen it yet.
Yeah, whatever it is, I'm banning polo shirts. It's like t-shirts and swimsuits only. Like
onesies only, man. By the way, representing the year of the onesie. By the way, I told our homie Meb Faber, he apparently didn't get the memo that it was the year of the onesie, because I was wearing the onesie on the first day.
I'm proud of you. I'm proud of you. If you go skiing, you got to wear the onesie too. It's got to be onesies all year. I would love to do an unconference. It's a question of like, what does an unconference look like? I think you and I agreed generally panels are a complete waste of time. I think you and I agree it's all about the meeting and drinking and exchanging of ideas. Is there a smart way to do that? Right? That's structured, but not so structured. It sort of like kills the conversation. You got to be able to have discourse, right? Like truly open discourse with people without ego getting involved or just politics getting involved. It's a tough balance to do this, to pull off this stuff.
Very tough, delicate balance. We'll figure it out one day. I don't know. Maybe the Booty Crew will help us figure this out. But I'll drop one nugget that because I've been talking a lot about marketing and branding a lot this week. Is it seems like Instagram Reels has figured out like a TikTok style algorithm. So for everybody that's working on their social media marketing, they might want to take a relook at Instagram Reels, because they are really pushing Reels these days, and people are starting to get a lot of traction on Reels. So out of all the nonsense we talked today, hopefully there's a little nugget in there that's maybe somewhat helpful to maybe one person in the audience, or
A positive takeaway.
A positive. That's what we do. We're here. We're all about the positive takeaway. You know, the more you know. We're getting our rainbow.
We spent 25 minutes complaining about ETF and hedge fund structures, but don't worry, there's a positive takeaway at the end, which is do some more Instagram reels. Listen, everyone, this has been the Pirates of Finance. Please fulfill your pirate pinky promise. No,
you can't even say it.
You can't. I can't. I'm like, this just feels weird. The pirate pinky promise means quite a bit to us. Again, PPP loans coming soon. We'll figure those out eventually. Thank you. Like, subscribe, share with your friends. Don't worry, they won't judge you. They'll enjoy the show too. With that, we out next week. Maybe I'll have a baby.
There we go.